Record. But I saw this break and I saw the fair value gap, so that's all I needed for me to get in. I'm show you the before. Um, right, this is at 108. This is the before it happened, and this is currently in right now.
What's going on, y'all? Bring y'all another breakdown on US30 on another trade that I've taken live. I actually wasn't able to, actually break this trade down live for everybody because the setup happened before everybody got on. So I'm actually here just to break down why I took the trade once again for everybody who is watching this recording. So I just want to show you guys that this is not hindsight. I did this yesterday at 1:08 p.m. Right, and this is on the Dow Jones Industrial Average Index, also known as US30. And as you can see at the timestamp at the top, it says May 6, 2022, 13:08. That's 1 o'clock p.m. Eastern Standard Time. So I just want to show you guys the before, and I also want to break down exactly why I wanted to take this trade. So without further ado, let's get into it. So if we start with the higher time frame, looking at the weekly time frame, we are in fact bearish, very bearish. Right? Price created a high, low, higher high, and structure was broken, taking out these lows. And what did the price do? We created a fair value gap, price rebalanced it, and continued to trade lower. So according to the weekly time frame, we are in bearish conditions. And on the daily time frame, excuse me, we are also in bearish conditions, right? And the reason why I was looking for shorts on this particular day, aside from the other days that we did go short, was because of the purge and revert. And what the purge and revert is, I'm not going to explain in great detail what it is. You can definitely go on ICT's channel and look up what a purge and revert is, so you would understand why price had explosive bullish price action to the upside, and we just took out these highs, and then explosive price action to the downside after we took the highs. So I identified the purge and revert, right, once we traded below this liquidity pool. And I would count this, right, May 2nd as day 1, April 29th as day 2, and finally April 28th as day 3. And just targeting the buy side liquidity that rests above the highs. So with that being said, May 4th was FOMC day, and what did we do? Price traded, right, with great bullish price action to the upside, taking out the buy side liquidity. So if you was not aware of this and you tried to go long on May 5th, you would have easily gotten your money taken if you did not understand the purge and revert. So again, I just want to thank ICT, Michael. Again, I just want to thank you for everything, because, because of you, like, my trading has definitely gotten a lot more consistent, a lot more precise, and my understanding of the markets has gone up as well. So again, I just want to thank you for showing me what I should be looking for in the markets. And again, I went in the markets myself, back tested, seen everything that he's taught on his YouTube channel and also in his own mentorship from my own eyes. So I'm able to do or, replicate what he does as well. So let's get into it. So on this particular day, the reason why, again, I was looking for shorts is because, one, we're bearish. Two, we have targets, sell side liquidity, which are these lows right here as well. And we're going to break down why I decided to go short in the afternoon session of New York. So as you can see, the narrative, right, which is the direction, is bearish. Like I just mentioned, higher time frame is letting us know that we're still bearish. My targets are the lows, these lows, and if price can reach down to here, this low as well, and also the other daily lows to the left, but this was just going to be a short-term day trade. So mostly just these lows were looking to be taken, and this low, if we were able to get down, which one in hindsight, we did not trade down into it. But again, I just want to show you that this was a profitable trade. Stop was taken out in profit, so no losses were taken on Friday. Okay, so one, why was this area an area of interest for me? Let's look to the left. Price, we traded into a fair value gap. We traded above buy side liquidity. And what else do we do? High, low, higher high, structure gets broken. And what do we create? Fair value gap. So understanding that we have our narrative, which is bearish, we have our targets, which is the lows, and we have our entry confirmation, which is the break of structure to the downside with the fair value gap. So that lets me know that price is going to be looking to trade short once we rebalance this insufficient price action. So what I did was measure the 50% out. Let me go back to the screenshot of the before it even happened. Right, stop loss went above the high. Excuse me. And I was looking to take my entry whenever price traded into the fair value gap, and I happened to get my entry right at the 50%. Right, it doesn't happen all the time. Price may just trade into the the fair value gap and then just trade away from it. It doesn't have to always come to the 50%. Right, but I happened to get my entry right at the 50%. So with that being said, that gave me a lower risk and more points or pips for me to catch to the downside. So let's look. We have the structure breaking, we have the structure broken, we have the fair value gap, and we have our narrative, we have our targets. Right, in this case, we can look to take profit below lows. So we have these relative equal lows. We can look to take profit below this low. We have more relative equal lows. We can look to take profit below these lows as well. We have lows right here that we could look to take profit below if price trades to them, right? Everything is probability. This is why we have stop losses. This is why we take profit, take partials, and this is why we continue to monitor our trades, right? Proper risk management, right? And ultimately, this low right here, if price gives it to us, which in this case, in hindsight, obviously we're able to tell we didn't get it. But again, I just want to show you guys that this was a profitable trade, right? So now that we have our targets identified, which are the lows, since we're going short, we have our entry confirmation and we have our narrative. Only thing now for us to do is just wait for our entry. And again, I have my entry at the 50% of this fair value gap. Stop loss above the high. And we can look to take profit below these lows, right? So the first take profit was around 188 points. Second take profit was about 285 points. Third take profit, if price was able to get down to it, 382. And if price was able to trade below this, it would have been a potential 494, basically 500 points, right? So I just want to show you guys the power of understanding your narrative, having your confirmations for you to enter the market, and your targets. Right here, price trades exactly to the 50%. And watch what we start to do. It starts to break down. But as I'm watching price, what I want to see price do is create more displacement, so more fair value gaps. That lets me know that I'm on the right side of the market potentially, and the market has a high probability of trading to the downside, right? If we're creating more displacement to the downside. So we're watching price live. And we start to create more displacement. Okay, as you see here, our first target has been hit. Now let's see if price is going to trade to our second target. And also taking a look at what price has done since we broke below our first target and also these lows right here, we have more displacement. So that was given more opportunities to go short. Right, and considering today, well, on Friday was NFP Friday, and it was the last day of the trading week, I just decided just to have one position instead of stack entries like I usually do early on in the week. So I didn't want to have any other reasons for me to get into the market. After I got in, I stayed in up here, took partials as price traded below the first profit taking area, and I wanted to see if price was able to trade below our second profit taking area. Right, which is what we got right here. We have more displacement. Now, you may be wondering, why did I put my stop loss above this high instead of this high over here? One, right, this high, I would consider this an intermediate term high. If you don't know what an intermediate term high is, you can go to ICT on YouTube, and in his 2022 mentorship, he explains in great detail in episodes 12 and 13 on how to identify an intermediate term high and how to properly use them. I'm not going to do that. I'm not your teacher. ICT is the teacher. I'm just, your tour guide using his concepts, right? And how I use his concepts to be profitable and very consistent. So, right, let me just go back. So again, first take profit was at this low, 187 points. Second take profit, 285 points. And if price was able to trade to our third take profit, it would give us about 380 points. Okay. And since I already know that price didn't trade all the way below this low, my stop loss was already in profit. So I already partialed out, took more profit, and price came back and took my stop loss in profit. So again, this was a profitable trade. Price takes this low, even if it was just by a little bit. All right, see here, price takes that low. And my stop loss is somewhere up here. So price took me out in profit, like I said before. And this was a very profitable trade. Right, in just about an hour and 30 minutes, 382 points of profit was collected. And if you don't know how to convert the points into pips, this is 3,820 pips of profit. Okay, very high probability, low risk, high reward, targeting the lows, just understanding your narrative, right? Understanding your targets, where are your targets, the lows, if you're going short. If you're going to be going long, you'll be targeting the highs, but since we are bearish, targeting the lows. My entry confirmation, we have price trading out of a bearish fair value gap, we have a break of structure, another fair value gap created, and that's my entry. Right. And just like that, very profitable trade.